Hello everyone, this is Juan Sarmiento and today is Friday, December the 9th. I had this candidate here. I'm gonna go through it right away so that we can eliminate it. It's a stock that has been moving very nicely, more than 10%. If I see, let's put it here under our candidates. I think I have other candidates here, more recent. Let's put it here, ISRG. And you can see that it has really gone from 178 to 272. That's a lot in just a few weeks. Okay, so that makes it a good candidate. But look at the IVSV. You can see that it's got a red line here. It means that the volatility has spiked, so that's the wrong time to buy anything. I have other candidates here, potentials, and once again, we look at the big moves and we look at the volatility in general to begin with. Okay, so if the volatility is a go, then we'll look at how fast it has gone up, and if it is bullish, essentially that's what we want to look for, and strongly bullish, because if the market collapses, even the strongly bullish will come down strongly with high volatility. But if it goes up, continues its trend, it will make us money with delta gains. And okay, so Starbucks, that's a big mover. Also, the volatility has come down. Do I have this as part of my positions? I'm gonna write it down, Starbucks. And ISRG, as I just said, unfortunately the volatility is high. So the only potential candidate here is Starbucks. Let's see how it looks like. Yeah, big mover. The earnings came up very nicely, beat expectations, and the volatility is here at the very low. If you take a look at the trade tab and enter Starbucks, you see here at the end, we do have a position on this. So, but you would see that the current IV percentile is 2%. So that's, if you didn't have a position, this will be a good trade. Okay, so because I don't have any new, let's go straight into the evaluation of our current positions and see what we are going to do. Organize them alphabetically so we don't miss anything, and go to the Analyze tab. And here we see, we had discussed in our last session that I left the put here, the December 9th put, because even though I roll out the December 9th call to January the 6th. Okay, so with the put, it expires today. So this is practically worthless. If I were to cover that, you can close it if you want. It's going to cost you 2 cents. Or you can let it go. I don't think it's between now and closing, it's going to drop below $220, $10. So it could happen, but it's unlikely. So I'm just going to assume that the least, or if you want to spend the $2 closing the trade, okay, that's fine. But we should sell one of the puts, January put, at least the 2 of them, okay? And so let's say sell to January put, same expiration, and that's $3.20, okay? Okay, so we can simply roll this over if you want, analyze rolling. And you put here January the 6th, okay? So $3.36 credit. Okay, I'm gonna do that. And it turns a little too bullish, but we can adjust our calls. First, let's add this up. And hopefully it will get done right away. That will close the current put. If it doesn't close, then just sell the sell the puts here, the January puts. We can do that as well. So let's try and do that. Okay, if we were to sell January puts, January the 2nd, okay? I think we're gonna do that instead, okay? Because what I'm doing here, the rollover is 2 trades, and one of them, this put is way out of the money, so it's not getting filled. This one is way out of the money, but there is plenty of time. It will get filled right away. So let's just close this attempted rollover, cancel that, analyze that again, and I'm just gonna sell it, okay? Sell those 2 puts. And they should be, because it's a single sell, it should fill quicker, right? There it is. You could close this, but again, only minutes to go. I mean, a couple of hours. It doesn't bother me too much. But in the meantime, we have this position here with 29 deltas. Okay, do I think that Caterpillar will continue on higher? Well, yeah, it could. Okay, it could happen. So let's leave it like that, okay? Because if it drops high fast, this is what we have. Okay, volatility will increase and we can make money. All right, so I'm gonna leave it like that. Let's move on to Cisco. And this is different because the next expiration is on the 16th. Okay, let's go to the Monitor tab, Account Statement, and look at our orders. 360 days, we only got 1 fill. Okay, there it is. Okay, that means that what you're seeing here is correct. There's no adjustments to this, and we see that we have lost $295. And you might say, okay, that's close enough, leave it alone, and just roll over the calls to January. And we're gonna do the puts the same as I just did with the Caterpillar, because it's 45, okay? 45 puts. Here is way out of the money. Well, perhaps not so much out of the money, but quite enough. Or you can just do the double trade like this, analyze rolling. Let's do the double trade. And it's a double diagonal. We are buying the December the 16th, which is what we have short, and short the January 13th. Okay, and that gives us 69 cents, and it becomes very bullish position. But you can always sell some of the long calls. After all, the stock has moved from 45 to 49. Okay, let's send this off. And when it gets filled, we'll get back to it. But look at the chart here. Oh yeah, this stock can just bottom out and probably go up again. Look at the Ichimoku cloud. That's where it could go. Pull back a little bit and then go up again. So yeah, we wanna try that. Okay, let's go to the next one. When Cisco gets filled, you can always sell some calls. After all, this is close to the 52-week high here. Well, not really, somewhere in the middle, but it's near the most recent high, so you could sell a call or two. All right, let's go to the Gilead. Gilead, wow, all the way up here. I don't know when we started this, but I assume that it's somewhere after earnings. Let's go to the Analyze tab. Okay, here we have it all the way up here. And again, same as Caterpillar, we have this put that expires today, and it's 1 cent. So we're going to sell 8 puts, but make sure that the short puts plus the existing puts don't add to more than your current long puts. So we have 8 that expire today plus 8 that will expire on January 6th, 26 cents. That's not a whole lot, but let's sell it anyway. Or you can sell just a fraction just to let's say 4 of them. Okay, and they're puts, 4 of them, 4 plus the 8, but in the end we end up with 4 shorts at the end of the closing today. And in this case, we could sell a couple of calls there because now we have 99 delta. Okay, how about we sell 1 or 2? After all, it is very close to the 52-week high. So yeah, I'm going to sell a couple of those calls. And because the puts got filled, yeah, I don't want it so negative here. Let's ignore this December 9th puts. And you can see, yeah, that's too negative. Okay, how about 1? Just 1. Okay, that's positive. I like that better. We're going to get some money back, but we keep our delta positives. Send that off. You can want to make it more positive, sell another put. 35 cents is not much money to get back. Let's just sell 1 more. I want to balance my deltas here. 1 more at 35. You see, I sold at 35, so let's try 35. Sometimes the quote doesn't match what we really could ask for. So I'm going to say 35. Just 1. And I could get back and sell some more if it fills. Okay, there, it got filled. And now our deltas are 29, and I sort of like that. 29 is good enough, all right? If the stock market drops, and if the stock drops, hey, our deltas will become negative. Okay, let's move on to GS, that's Goldman Sachs. Let's see what we have there. Okay, here again we have the put expiring. Same thing, same theory. Okay, what are we gonna do? This put is gonna expire worthless today, and we need to sell 1 put for January. Okay, so make sure you say sell. I'm copying the January just to get that date, but I need to make sure that it's a put. Okay, and it's a sell. Okay, sell 1 January 6, 350 put at $5.55. That's not bad. Now, it gives you the impression that you could lose a lot of money if the stock falls, but in reality, that's because we have these puts here that I sold that would expire today. So you need to deselect that, and then it looks more normal. Okay, that's adjusting one side early on last week, and now we are adjust the puts close to expiration, and that's because the stock was above the strike price of the 350. I was more urged to do my rollover on the call side last week, and this week I just add the puts, or in this case just 1 put, and you can close this. If you wish, you could close this that expires today for 2 cents. Okay, I'm confident that it's going to expire worthless. But if you say, well, I want to be very strict and have some discipline, and well, then sell it. Simply do a rollover. The rollovers might be more difficult to do. Okay, let's see. Let's just do it for kicks. Let's buy back this 1 December put, $350, $10 from below at 1 cent. You can do that, and I'm doing it just to demonstrate. Okay, we're not that cheap, I guess. Let's go to LMT. And in this case, this expired December the 23rd, so that's 2 weeks from now, if I'm correct. yeah, 14 days from now, so we are in no hurry. Let me go to the monitor tab, and you can see that I already made an adjustment. Okay, so we can copy all that, or simply copy it here, and you see that year to date we have lost $40. So it's not a big loser, but it's not a gainer either. But I'm gonna leave it, let it be. Okay, something just filled. What was it? Go here to the trade field, and you see that, wait a minute, activity and positions here. Okay, that Caterpillar put got filled, and we're still buying that GS. Let's go to Caterpillar again. Cool. That's perfect. We can close this as well. Again, you can put it at 1 penny, buy it back at 1 penny, and we have 2 of them. Let's just do that to be very disciplined, but very unlikely that this stock will drop 10 points between now and expiration, which is only a few hours away. Okay, let's move on to Starbucks. Yeah, we're not gonna do anything on Starbucks. I was considering entering a new trade, but no, I'm not gonna do it. And that's about it. We have seen as we reach the end of the year, you can see that we have pretty much steadily held to this $10,000, $11,000, $12,000 gain, and we kept on playing the trades anyway. Why? Because we don't know when the big move is going to happen. A big move up, big move down, a big spike in volatility, they happen when you least expect it. And then if it happens and you didn't have a trade, then you feel stupid and you lost your opportunity. Instead, I have created a strategy, and I do this day after day after day, week after week, and I do it religiously and I do it systematically. And I don't make any judgments, too much judgment about a stock. I just have these rules, and I keep the rules regardless. And well, so far it's giving me results, good results. Okay, could be better, I suppose, but you never know when the big collapse in the market is going to happen, or the big jump up on some of these stocks. I just make sure that I select those stocks that could go up significantly. Okay, so those are the ones that could make me money on the upside. And click here on the year to date, and you could see which of your trades have worked out and which ones didn't. All right, and sometimes they may be reflecting a big loser when in reality we may have collected our gains the year before. So that's not accurate, but you should know what you have done, and look at this Apple and look at your trades and look what you failed or didn't work out, and keep that as a future reference, and make sure that doesn't happen again, kind of thing. All right, but so far for the year, select that, $11,000 out of $100,000 as 11%, more than 11%, because we started this about 90,000 last year. Okay, that's all for today. Thank you very much for joining me. See you next time. Bye-bye.